Today's event is about the economy and the health of the real estate market here in Maine. And to that end, MEREDA is proud to present its 11th release of the MEREDA Index, underwritten by Eaton Peabody, which is reflective of the real estate economy from the second through the third quarter of 2018. So I now welcome Matt Worthen of Eaton Peabody, our index sponsor, to introduce our index video.
Thank you, Gary. Eaton Peabody is thrilled to underwrite the edition of MEREDA Index, the industry's leading measure of the pulse of Maine's real estate market. An important economic indicator for MEREDA members, there are thousands of employees and Maine's economy at large. We think this is one of the best baseline measurements of the health of the segment in Maine. This edition of the MEREDA Index was little changed in the last 6 months, declining by 0.2% since the first quarter of 2018, and by a mere 0.3 percentage points over the 12 months since the third quarter of 2018. The small changes in the overall index are the result of growth in the residential and construction components, which growth is offset by declines in the commercial component. This small overall decline for the 6 and 12-month periods reflects a gradual softening following several years of robust growth. Eaton Peabody is pleased to welcome, via video, 4 of the state's top professionals to provide further insight. Gary Vogel with the introduction, Roxanne Cole on the commercial market, Tom Landry on residential, and Tim Hebert will discuss construction.
The MEREDA Index is a measure of real estate activity designed to track changes in Maine's real estate markets. The index is a composite of 9 seasonally adjusted measures reflecting both new development and transactions involving existing properties. It covers both the commercial and residential markets statewide. This edition of the MEREDA Index comes in at 103.1. The small changes in the overall index are the result of growth in the residential and construction components, offset by declines in the commercial component. This edition of the MEREDA Index is underwritten by Eaton Peabody and was filmed on location at Clark Insurance in Portland.
Hi, I'm Gary Vogel. I am the president of MEREDA and an attorney at Drummond Woodson. MEREDA decided to invest in creating the index, and we hired Dr. Charles Colgan, who's done the work for us ever since, and we determined that it would be useful to the whole Maine real estate industry to have data showing the movement of the real estate market, both as a whole and as to individual segments. The index is important because it does show trends for the real estate market. This year, the index has shown a small overall decline, and frankly, I think that's a good thing, that it shows a gradual softening of the market rather than dealing with booms and busts cycles. However, when you get into the actual data, you'll see that residential is up, commercial is down. So we've engaged individual experts in various sectors of real estate, residential, commercial, construction, to talk about how the index results apply in their particular fields. And I think some of this information is some of the most useful and interesting information about the index. Not only can they relate the data and the results that we've obtained to their individual segment of the market, but also to local trends, to people that they've talked to, and what they really feel is happening on the ground.
The commercial market index recovered to pre-recession levels in 2013 and peaked in the second quarter of 2016. Since then, the volume of transactions and the total volume of building square feet leased and sold has been declining. Over the past 6 months, these have declined 10% and 20% respectively. However, the per square foot lease and sales price indexes have showed continued growth over the past 6 months. The former index up 2.4% and the latter up 8.7%. Overall, the commercial index declined 2% over the past 2 quarters.
My name is Roxanne Cole of Roxanne Cole Commercial Real Estate. What I've seen in terms of transactions is there's a lot of activity in the market. People are very, very anxious. There's a lot of intensity about growth, pent-up demand. People want to move into bigger facilities, that sort of thing. What sometimes is a problem, there are a couple of real issues. One is construction pricing. it's coming in as much as 20% or 35% higher than last year in projects that have been priced. And some people just say, I'm not going to do it. So projects that have had a lot of promise and have gone in the direction of being, on the drawing board, going through permitting, ready to go, and they just don't do it. And so from that perspective, that's a problem. So some of the things that we know would be happening can't come to fruition. Looking ahead, I'm very optimistic for the future. I talk with people all day like all the brokers do, the developers and people in economic development, and people they're really, really all about making something happen. And when you think about the big projects that are happening around, those have a great deal of energy. And you think the Maine Medical Center expansion, Rock Row and Westbrook, Scarborough Downs redevelopment, those things are enormous in terms of what they create for energy and what will come for growth and development after those. So that's really fun. And the buildings being built in downtown Portland. Downtown Portland is just soaring, and it has a very positive impact on people overall. When you have such a wonderful story that's told nationally and all, is fabulous. So I see fabulous, fabulous opportunity in this marketplace. I see that a lot of what we're looking at now is just the very beginning of what we will see. And so sometimes you're a little bit up, sometimes you're a little bit down in terms of the stats, but it's full steam ahead. People are very, very anxious to talk about doing projects and what they want to do for their companies. And these big projects make a lot of excitement. And the big ideas around the state, the things that people are doing, to help themselves in addition to hoping for the big company to move into their area. This sort of thing is very, very exciting, and it bodes very well for the future of Maine and the commercial market.
Sales of existing houses and permits for the new residential construction continued to grow at 1.9% and 2.3% respectively over the past 2 quarters. Mortgage originations also grew apace with sales of existing units at 1.3%. But the seasonally adjusted median price showed little change through the first 3 quarters of 2018, falling 0.5% from the first to second quarter and rising 0.4% from the second to third. Overall, the index for the median price fell 0.2% over the past 2 quarters. The net effect of these changes was a rise in the residential index of 1.3% over the past 6 months.
My name is Tom Landry. I own Benchmark Real Estate, and I also own Cornerstone Building and Restoration. We've seen an uptick in the market all throughout last year, and really it's been a trend that's ever increasing over the last 5 years. In this sector that we're looking at now, we frequently saw multiple offers, over asking prices. Sometimes we saw people get into bidding wars. So it's a very changed market. It's very, very active. It's great to be in Greater Portland and Southern Maine. So you can certainly see pockets of activity. This is not just about Portland, Maine, right? And you're seeing growth, you're seeing prosperity, you're seeing a renaissance and changes happen in urban areas all across the state of Maine. People are challenging the idea of going to the suburbs and saying, I want to be close and walkable to amenities. People are willing to trade off on a lot of things to get proximity. We're seeing smaller units being produced and people willing to live in 500, 700 square feet, 1,000 square feet, versus 3,000 in the suburbs. They want to be walkable. So they're trading off size and amenities, whether they be higher end fit and finish, to be walkable to more things for lifestyle. So where we are now in Portland and Greater Portland, and I also think in many of the smaller communities and cities throughout Maine, and where we're going to be in 10 years and 20 years is something very, very different. You are finally seeing that change all across the state and all across the country, where people are reurbanizing, again, mostly surrounding lifestyles and mostly surrounding the fact that our house sizes have shrunk. So I anticipate that to continue and to accelerate. I think we're going to see tremendous investment in our urban areas, and we're also going to see people that want to live in those urban areas, and like we talked about before, sacrifice size and amenities for that proximity to walkable amenities. So I'm very excited about it. I think we are in a renaissance in these urban areas all across the state of Maine.
The construction component also showed strong performance over the past 6 months, up 5.1%. At 29,100, construction employment in Maine is still 2,300 below the pre-recession peak of 2006 quarter 1, but 5,000 above the lowest level in the recession in 2009 quarter 4.
My name is Tim Hebert. I'm owner of Hebert Construction. As busy as the market is, we're starting to see more and more of the trend right now be normalized in construction. What I mean by that is people are looking at it as the market dropping from underneath us, but in reality, we're going back to a more normal state, and it's really no cause of concern of ours. In fact, I think that it's a positive thing. We're able to get back to more competition, more people looking for projects, which is just providing a better opportunity to be able to control costs on a project. And I think that's one of the most important things we need to get under control, the rising costs of construction. There's a variety of things driving costs up in construction right now. We have the lack of qualified, skilled workforce. We have an aging population. We have a lack of competition. The increases in tariffs, trucking, and all of the things surrounding the construction industry as a whole. It's a multitude of things that are really impacting construction overall, not necessarily construction in and of itself. We're really starting to see more and more projects go towards the construction management approach, the design assist, design build process, more so than we are seeing them go competitively bid. And the reason for that is that there's value in generating a project through teamwork. The people and the companies are not necessarily available to bid a project and start it right away, but if they have some visibility, they can plan for the projects, and then those projects are more successful because the process through design is not just designing and then building. It's cost modeling, designing, cost modeling, designing, building. So it's building to expectations, and that is one thing that we've been able to do a lot of recently, which, owners and architects and contractors coming together to be able to align expectations and produce predictable results.
So we hope the index proves to be really a valuable tool and continues to be a valuable tool for anybody involved in real estate in Maine.
This edition of the MEREDA Index is underwritten by Eaton Peabody and supported by Benchmark Residential and Investment Real Estate, Katahdin Trust Company, Redstone, Rieger Dasco Properties, and Express Copy. Thank you.
Thanks, Matt, and thanks to all of the presenters on the video for the index. On the table, there's an envelope that says, "Please don't open until you're instructed to do so." That is the index report. There's multiple copies in there, so you can open it now if you haven't already done so. And, feel free to take them with you. If there isn't enough, I think we've got more out at the registration desks. So this edition of the MEREDA Index would not be possible without the expertise of Dr. Charles Colgan from the Middlebury Institute of International Studies at USM, and without the financial support of Eaton Peabody, Benchmark Residential and Investment Real Estate, Katahdin Trust Company, Redstone, Rieger Dasco Properties, and Express Copy. Also, thank you to the Boulos Company for graciously allowing Dr. Colgan to access the data again this year. The index is constructed using methods to adjust for seasonal changes, and the underlying data is also subject to regular revisions. In 2018, the Boulos Company transitioned data management vendors, resulting in inconsistencies between the old and the new data sets, and the commercial index was completely recalculated from 2005 to the third quarter of 2018. As a result, comparisons between the absolute values of the index in prior editions, if you were to take last year's or the prior years, aren't exactly comparable, and therefore may not be entirely meaningful. But the trends measured are fundamentally measured across data sets, and the graphs and charts that you'll see in the index report do show the trends in a consistent basis. As I said, the full index report is on the table in front of you, and please feel free to take them and pass them around.